I mean, of course, central banks talk about the inflation in the economy in general, and food commodities. They have their own supply and demand fundamentals, and we've seen a number of reasons that explain the upside in agri-commodities, and they're likely to continue to be rather bullish across the sector. I mean, fiscal and monetary stimuli, it tends to create this transition from investors' money away from government bonds into agricultural commodities, commodity futures, and that transition is likely to continue going forward. And we see that across several assets. Also, several companies, because of all these disruptions, have been working with higher working stocks. We see that continuing because there are still several disruptions taking place right now, especially in everything that is shipped in containers. So that's going to continue. We don't see any immediate relief on that side. And then I have to single out the weather.
Yeah, I'll come to the weather in a moment, if I may, because, of course, many people have stuck to longer-term weather changes and climate change for reasons why food prices are going to go higher historically, but it hasn't always happened. But I just want to ask you a question about one of the other factors you mentioned in your copy, and this is the speculator. Very often tourists get their fingers burnt in your sector. You know this way better than I do as well. But speculators led lumber to go way higher than it ever was going to really go realistically on the base of demand, and then crash aggressively. Why can't speculators create the same phenomenon in the agri-commodities arena, i.e. these price increases are being led by speculators who are then going to dump their holdings and create a crash in the underlying price?
It's always a risk. I mean, that can always happen. But what we've seen is a sort of steady flow of money into agricultural commodities with ups and downs, but they go to a record net long across the commodity sector in January. Speculators sold a little bit of that position, but they still hold a large position there. And usually new money tends to go long. And we also see a steady increase in index funds, commodity index funds, and they tend to move much more slowly. They're not so aggressive that they buy and sell the next day. Of course, that might happen in any one single commodity, but across the sector, I think this is still a lot of interest from investors in general to hold commodities long positions.
Carlos, I want to pick up on the weather. You point out in your research the excessive rain and floods in Europe, a cold front entering Brazil, and hot weather and drought in North America. We've been talking to insurance companies, and even they cannot use existing models to try and predict weather events. We have a lot of anomalies out there. What does that uncertainty mean for the commodities, soft commodities?
Well, certainly the way it has been pushing prices across the board. Whichever commodity you look at, coffee, sugar, corn, before it was soybeans, they all been pushed higher because of weather problems. I guess everyone will have to be working with models with fat tails going ahead, and there will be high volatility, and traders will have to get used to it. It seems to be these extreme weather events seem to be happening a little bit more frequent, and going forward, well, we want to believe some sort of normality will bring some relief, but there's a 66% chance of another La Nina, and La Nina is generally very bullish for agricultural commodities. And La Nina normally tends to make South America dry, and of course, we're talking about some of the largest crops on earth, especially when it comes to soybeans and corn.